Right, I'll probably kick off. We've got this recorded as well, so for anyone on the call, if you do need to drop off early, it will be being recorded, or if you've got any colleagues who can't make it, it'll be sent out after this as well. So it'll be in our Someday newsletter. If you don't already subscribe, then it'll be sent out through that, but it'll also be sent directly to anyone who's registered. So you can obviously share that link as well. So I'll quickly introduce myself because most people probably or might not, but probably know who I am. My name's Henry. I lead the customer success team and the partnership team here at Someday. So we're a carbon accounting platform, technologically enabling carbon accounting and sustainability work. And I lead the team that partners with fantastic advisory partners like Forvis, Mazars, and Damien, but also the team that helps with things like onboarding and ongoing support and success of the platform, which is a pretty important thing to us as well. My background is actually mainly in finance. I have worked a little bit in sustainability and obviously work quite a bit in it now, but my background is mainly financial reporting and auditing. So it's an interesting lens for me to bring, but I will be relying very heavily on Damien for the complexities of sustainability itself. So with that, I'll pass over to Damien to introduce himself as well.
Thank you, Henry. So I'm Damien Lambert. I'm leading our sustainability consulting division at Forvis Mazars in Australia. And Forvis Mazars, it's a top 10 global accounting firm. So we're doing audit, tax, and consulting, including sustainability services. We have roughly 400 people globally working in sustainability. So that's a pretty strong commitment, and with a very strong presence also in Europe. So where standards in terms of sustainability are more advanced or more strict, I would say. So I joined Mazars close to 2 years ago now, with a background in financial audit, but also expertise in carbon accounting and environmental accounting. So I'm covering these three aspects that are more and more important because topics are interconnected. Climate change and nature typically goes end to end. And ultimately, you need to assess the financial impact of this sustainability risk. So ultimately, it goes down to financial accounting to try to assess and estimate those risks. A brief introduction.
Yeah, two very interconnected fields for sure. And I think they're becoming more and more interconnected, particularly in Australia. I know when CSRD was first announced in Europe long before, it was already linking, the audits of finance and sustainability having to be performed together. And I think made that link quite early on. But Australia's still, I think, on a journey to do that. I think this year has been a big push with the first round of regulatory compliance coming in for Group 1 companies. So definitely seen a big push even in the first couple of months and the last few months of the prior year as well. But I'm sure it'll be more and further refined as companies start to figure out what works and what doesn't, much like accounting, where there's always the standard gets released and then all these adjustments afterwards to kind of work out these little kinks and how things are gonna play out in practice.
Yeah, so. You're right. Yeah, in Australia, the key focus is on climate first, and probably nature will be the second one, with international sustainability standard boards actually working on these biodiversity standards, and we got TNFD also that's been released a bit earlier. So I guess it's coming.
So no one get too comfortable. So with that, I suppose we'll jump into a few questions that I thought we'd go through. It'd be good to sort of cover off for everyone here on the call and anyone who's going to watch this later on. And I guess the first sort of main one is going to be, and there's probably going to be a few different reasons for this, but why should companies start sustainability reporting?
I mean, we have quite a few pressure points, I would say. I mean, the first key driver is regulation currently. For a large number of companies, they will be affected with the climate reporting regulation. So it's been introduced earlier last year. And for the largest companies, so we're talking about companies meeting 2 out of 3 criteria, 500 million revenue, 1 billion consolidated assets, or 500 employees or more. Then this company has to start already from 1st of January 2025 to prepare this climate reporting, and it will be audited. And importantly, as part of this climate reporting, you need to report on your carbon emissions. This is where, you know, tools like Someday are very useful because you need to report on scope 1 and 2 emissions. That will get limited assurance in the first year. So you need to put it as a priority, and scope 3 emissions will come a bit later because there is a 1-year relief. But that's one of the key reasons. If you're in the scope of the regulations, of course, you want to get started as soon as possible because it takes time, it's a long journey, and you have a lot of trials and errors as well along the way. So if you want to have a mature report and, you know, being comfortable when the auditor will come in and check what you've done, it's good to be prepared in advance. So regulation will be one, definitely. Second one, I would say investors, financing. That's a second reason why you want to get started. So just to give you an example, we're working with a client who is planning to raise a significant amount of money from banks because the plan is to make several acquisitions, so you need a lot of fundings. And currently we're helping this client prepare ESG assessment report. So it's a maturity assessment report just to give a sense of where the company stand in terms of maturity on sustainability topics. And this client is actually using our report to talk to the banks and try to get some discounts. So when we're looking, you know, specific roadmap about what you can do in terms of, you know, calculating your carbon footprint, committing to emission reduction and so on, actually the bank can give you a discount. And when you're talking about, you know, up to 0.15%. So when you're raising millions, it starts to matter, you know, the 0.15%. So that's a second reason. I mean, you can see that you have a lot of debates currently around, you know, responsible finance. I mean, the latest news from today, it's in the Financial Review that Macquarie is walking away from this Net Zero Banking Alliance. So they're basically following what's being done in the US. But importantly, we still see quite many investors committed to responsible finance. This Net Zero Banking Alliance, you still have 135 members, and it represents close to 56 trillion of assets under management. So it's still huge. My feeling is that it won't, you know, go away anytime soon. Yes.
Yeah. I mean, that makes it, we've seen that play out so many times with both. There's some banks that use Someday, and we've seen that they're using Someday to reach out for financed emissions, and the process and I guess the time and money that goes into them, you know, researching either solutions on how to do this or hiring a relationship team that can try and manage the relationships to do this. I mean, ultimately the bank, for context for everyone, they're going to have to report their numbers too, and their financed emissions are the emissions of their portfolio. So collecting those emissions from their portfolio can be a particularly arduous task, because you might have some people in your portfolio who already have their data and they might provide that back. But then you also have some companies in your portfolio who have never done this before, and the bank just can't put their hands up and say, well, they've not done it, so we won't worry about it. They're sort of expected, I suppose, to go out and actually start trying to work with these companies in their portfolio to collect that data, and that obviously costs money. So if you're a company that's already got all this in line, you've actually got a fair bit of leverage now to say, when I go to the bank, I can say, you don't have to spend all this money trying to get this data from me. I already got it. So that actually does often, give you a bit of leverage. And the same thing is true with tenders as well. So if you're in the construction or excuse me, manufacturing kind of industries, being able to go to, particularly if it's government, but even other companies, and say, well, we've already got this data. You won't have to worry about trying to get that from us for your own scope 3. Then that's a pretty powerful lever to have to assist with your applications in a tender process as well. So that's really helpful. And I guess one is sort of
something maybe to add is also from an HR perspective, young graduates specifically are quite interested in sustainability, and they want to work for a value-aligned employers. So if you're working in a sector where it's difficult to attract and retain talents, that could be also a good way to to improve your HR practices and efficiently, boost productivity ultimately. Because even at Forvis Mazars, when we have, job interviews, the question from time to time pops up about, what do you do at Forvis Mazars in terms of sustainability? So we explain that, we have our SBTi targets validated, and we have a strong diversity and inclusion policy as well, and so on. So a few things to consider as well.
Yeah, definitely. And then beyond the reason sort of why to get involved, I guess the next logical question is, where would you get started? I mean, it can be quite I guess you can quite easily spiral when it comes to sustainability accounting as to, or reporting, I should say, on how much detail to put in, and it can feel quite daunting, I think, to a lot of companies. What would you say? What advice would you have around just how would a company get started if they haven't done this before?
I mean, what we do in general with our clients is we start with an ESG maturity assessment. It's already a first step, just to, so we're running through a questionnaire of 46 questions on different sustainability topics. And the idea is just to assess the maturity of the organizations, what are the key priorities of the organization in terms of, sustainability actions already in progress or, already in place. And we do that because sustainability, it's good to have an holistic approach. A lot of different topics are actually interconnected. So it really helps defining a good roadmap of actions. So you can try to tackle, 2 issues at once, for example. So that's what we start with, this ESG maturity assessment. The second step is, I would say, try to measure before, implementing any sustainability actions. Just to give you a very concrete examples, I have a client, so we're discussing about this carbon footprint assessment, and he's telling us, oh, we already installed a lot of solar panels on the roof and so on. And I mean, that's great. But, you haven't captured the emission reduction from this solar panel because you haven't measured your emission in the first place. So my advice is try to measure first, get its baseline of carbon footprint. Then you will be able actually to see what improvement you got from any sustainability action that you're doing. So that would be the second step. Third step, or advice, I would say, try to start small with clearly delimited project. Don't try to do too many things at once. It can be very quickly overwhelming, but try to have define project, and then you can scale up operations, move on to a different topic and so on. But having a clear roadmap with clearly defined priorities, I think it's important, and be a bit strategic also about the actions that you will take in the first place. I mean, to come back again to this carbon footprint assessment, because this is a bit the topic of the webinar. I mean, it's a good project because you can actually interact and educate a lot of stakeholders within the organization. To collect data, you will need to talk to, HR, finance team, operations, and so on. So that's a way to try also a bit of learning on what is sustainability, what it matters. So raise awareness internally. And ultimately, you get a very concrete outcome. You get specific figures, graphs about what's your carbon footprint emission. So that's also something very easy to communicate internally. So that's why I found it quite an interesting project. Third one, that's also an advice I give to my clients. If you're a subsidiary of a large company, quite often the parent company, I'm talking about clients, for example, with headquarters in Europe, they already do a lot in terms of ESG. So the first step is go to the central team, ask your parent company, ask the ESG expert for resources, because they've done already a lot. So that's really a way to leverage these internal insights, and they make it also quite cost efficient for you if you do that. So that's then of course you need a bit of fine tuning, for local specificities in Australia and so on. And this is where you can, have consultants come in to adjust and make sure that your work actually comply with the local regulation. But as a first step, just to get things started, get in touch with the local headquarter, central ESG team, because they've done a lot. And last topic maybe I want to cover is actually look at grants that are available. I mean, something that just came up is the New South Wales net zero grants for businesses. So they can get up to 30K to help finance, net zero action, carbon footprint assessment, and so on. So that's definitely something to consider for businesses. And if they're not in New South Wales, it's always good to monitor for this type of grants, because that can also boost and assist you with your ESG journey.
Yeah, and that almost goes back to the whole what we were saying before, where banks will give you a discount, if you've already got that data, and it's the government's almost finding their own way to do a similar thing, because they've set their own net zero targets. They've obviously got their own suppliers, so they're thinking, well, how do we possibly hit this if our suppliers aren't reducing as well? So trying to create these programs, one through tenders and saying, it's a big tick if you've already got that information for a tender perspective, but also how do we provide grants and different programs to try and facilitate the overall reduction, obviously just broadly for the environment as well, but also for their own goals that they've got to say, well, we need to be able to reduce. So we've got to facilitate the reduction overall if we're going to meet these goals. And I think a lot of companies are starting to realize that more, because they, set 2050 goals 4 or 5 years ago, when, for a lot of companies, sustainability was a bit more siloed, and now they're realizing, hang on, we've actually got to meet these goals and track towards them. So what do we do? We've actually got to start measuring the data and understanding it, and putting plans in place to reduce, which is, I think, for a lot of companies is a fairly new thing to be doing, but they're getting there. Yeah. We've tried to do that as much as possible within Someday, to say, we've got different teams interacting with the platform to try and encourage that collaboration between procurement, finance, sustainability, to say it only really works if you're all involved. Otherwise, it's not going to be really effective or efficient really for anyone. You're just going to be double working a lot of data. So
it's really a team effort, and you already see it in the Scope 3 emissions, where instead of competitions, you're more around collaborations, trying to educate your suppliers and so on. So that's a very great initiative.
Yeah, and that's also why it's so good to start sooner, right? Because if you've got your net zero target, say you're a big company and you've got a 2035 or something net zero target, it's not a lot of time really to meet that target. You've only got about 10 years left now. So you think, well, if we should really be engaging with our supply chain now, because then we've got some time to sort of educate and provide resources and bring them along on this journey with us. Because if we wait even a few more years and then engage with them, it's going to be a bit more of a difficult conversation, where we've got to tell them it's either they give us the data now, or they start reducing now, or we have to find new suppliers. It's not really a conversation anyone wants to have. So if you start now, then you can start to work with them and see where they're at and say, okay, you're not measuring yet, but can we help you measure? There's some resources we could provide, or what could we be doing here to help with that process? So I know a couple of the big industries you work on are logistics and manufacturing, which are also coincidentally some of the more complicated and often emissions heavy areas as well. So it's particularly can be challenging at times, I'm sure. So what do you see are some of the key areas? So sticking to, say, specifically logistics, because they can be obviously quite different. For logistics specifically, what do you see a lot of the opportunities and a lot of the challenges that they're facing in the space, and how do you help clients overcome those?
Yeah, I mean, first it's important to remind that logistics is still a very big part of the carbon emissions in Australia. So I think it's when you talk about transport, it's 20% of the greenhouse gas emission of Australia. So it's a very important sector to decarbonize. And for companies, there are quite many opportunities actually to do so. I mean, the first one is, access to new markets, and actually be able to charge a premium for green delivery, for example. So I'm just referring to a survey from DHL, so the global logistic company. But what they found is that in their survey, 20% of the customers are willing to always choose to pay more to get this green delivery, and 42% are willing to sometime pay for this green delivery. So it's still some significant figures and significant opportunities for businesses to access to new markets. The second one, I would say, is cost saving. I mean, roughly when you talk about logistics, for example, Linfox mentioned that 75% of their carbon footprint relates to the diesel fuel consumption. So if you want to decarbonize, actually you need to reduce your fuel consumption and potentially shift to different technologies. So one way to reduce your fuel consumption, and a lot can be done currently with current technologies. Optimizing routing. If you're optimizing the road networks of your trucks and so on, that's a way to save on fuel and also to save on carbon emissions. So for example, within Forvis Mazars, we have a tool called Freight Network Navigator. And what it is basically profitability dashboard for medium-sized logistic companies. And really the focus is on, how can you optimize routing? How can you optimize loads? How do you choose your customers? Because sometimes you accept a contract, but actually it's not profitable. So you want to, to navigate profitability, but at the same time, you can also reduce your carbon emissions. So that's a very good way to do it. Second point I will make is around the fuel efficiency of the vehicles, of the trucks that you're using. What we've seen is that actually in Australia, quite many logistic companies have an old fleet of vehicles. So at some point, they will need to start thinking about renewing that fleet of vehicles. And so when you do so, you want to look at the fuel efficiency of the different models of trucks that you're choosing, and also at the loading capabilities. It should match also what your clients actually want from you. So that's another way to save on fuel. And for example, there was this initiative that Lindsay from Someday mentioned about this green vehicle guide from the Australian government. So it's a website where you can choose, look at different type of vehicles and look at how fuel efficient are different models of vehicles. So currently they don't do it for trucks, but at least it's still a useful tool to use when you're thinking about, buying new cars and so on. Another way to make some savings and reduce your carbon emission is to consider mixing the modes of transportation. So typically, air freight will be the most polluting in a sense. Then you get freight, road freight, and then you get a rail, and you get ocean shipping. And if you're able to mix, for example, road and rail, I think that's what Linfox, for example, is investing in. It's investing in these intermodal platforms to be able to ship some part of the loads from road to rail. This is a way also to reduce your carbon emissions. When you consider also dense urban area, this last mile delivery, quite often it adds up a lot of fuels just to deliver door to door. So there are a few things you can consider. Instead of having a truck in the cities, maybe try to get e-cargo bags. It works fine. That could be a good way to do it. And we did also a sustainability nudge report some time ago. And what we show is, it's very interesting, this nudge, because it's basically free. You try to shift behaviors of people by just implementing a few actions, like framing or changing the default option. And so one way to do it is, if you have real-time fuel consumption on the vehicles, you have some research showing that actually the driver will pay a bit more attention and will reduce also the fuel consumption. Another way to do it when we talk about the last mile delivery is try to, when people are buying online, for example, try to incentivize them to go to a pickup location. If you explain that, this is a benefit in terms of, for the planet in terms of emission reduction, if you choose to go to a pickup location close to your place instead of having the parcel delivered to your door, then again, you're saving on cost and also on fuel. So achieving, you know, two objectives at once.
Yeah, I've noticed there's a few. I've been in San Francisco for the last couple of weeks, and it's funny, in California they have, I mean, broadly the US does not have a lot of rules around reporting sustainability, but in California there definitely are. And they there's a few things that I've noticed. One is all the Amazon delivery trucks now are electric, which when I lived here a year or so ago, they were not. They're now all electric. And I also noticed when I'm trying to book an Uber now, it defaults to the eco option for the Uber. So it'll default to an eco vehicle, like a green vehicle, hybrid or electric. And then I've got to manually change it if I want to pick something else. It'll automatically do that one, which is interesting.
I think it's a great example of nudge, you know, changing the default option that automatically you get a green vehicle, except if you decide to change it.
Yeah,
that's really a way to shift behaviors as well.
Yeah, definitely. That's very interesting. I'm sure there are a lot of companies who, you know, maybe not the bigger logistics companies necessarily, who've probably been looking at this for a while, but I'm sure there's some mid-size logistics companies who are realizing from sustainability reporting these more efficient channels from just a cost perspective, as you mentioned, from shipping things, just something as easy as, you know, we've been using these ships that are going down this specific route, but now from a sustainability perspective, you're looking at, well, there's a different route that will be more beneficial from a carbon perspective, but they've now realized from a fuel perspective, obviously, it then is also more beneficial. So these things that maybe they just haven't looked at before, that this brings to light. I know that Lindsay and Jess, our co-founders, who worked in a mining company for many years doing this kind of work, which you can only imagine, particularly years ago, what that was like. They've got many stories around how trying to help the business understand that, yes, you know, we could buy this mining part from China and it is theoretically cheaper initially, but think about what it'll cost us to get out here, the shipping from a carbon perspective, from a fuel perspective, when there's this, you know, this other factory that makes it locally in Australia. So I digress. But so the other field, I guess, is going to be, or the other area of focus is manufacturing. And are there any areas or any particular sort of unique challenges that you think they're going either already experiencing, or you sort of foresee them experiencing as a lot of this mandatory reporting continues to roll out?
Yeah, I mean, you have specific challenges to manufacturing because of the complexity of the processes, and also a lot of, you know, you have some mature technologies that could already save some carbon emissions, but also there is a lot of, you know, still work in progress, I would say. But I mean, worldwide, we're talking about 40% of global emissions coming from industrials. So that's a big figures, and a lot of companies are committed to do it. So again, in terms of opportunities, it's about accessing new markets. I mean, we're talking about green steel, or we're talking about recycled plastics. I mean, it's all opportunities to charge a premium, and expectations are that the demand will be growing for this type of products. I mean, specifically when we talk about companies, you know, having net zero targets, you know, they have quite often a mid target around 2030, 2035. So it's getting very close now. So my expectation is that this demand for this type of product will grow over time. And then again, it's a matter of cost saving. So I was looking at a report from Engie. You know, Engie, it's the French company working in electricity and so on. And they're helping companies decarbonize their operations. And what they found is that in 60% of the case, when they're able to achieve deep decarbonization with, you know, a positive or at least a neutral impact. So you're breaking even. So it's still a very good result. And you have a few technologies you can use to do that. So a few tips I would give to manufacturing companies is maybe first to have a bit of an energy audit of their operations, just to understand a bit better how they use electricity, fuel, and so on. And that's a way to spot gaps and try to get these low-hanging fruits very quickly, because quite often that's where you start, what's easy to be done, where you can cut very quickly. And then second step is maybe consider shifting to renewable energy. That's a good way to do it, or install solar panels. That will help a lot with your, scope 2 emissions. Try to engage also, if you can, with your suppliers. I mean, the platform from Someday is quite useful, because you have these supplier engagement platforms that can make it very easy to communicate with your suppliers. So the idea is, look at your list of suppliers, which one are, the most carbon intensive, and try to engage and work on a way to get access to low carbon products if you can. And then consider also some new technologies. I mean, it can be expensive in the first place. We're talking about, electric boiler maybe, or biomass and so on. But you can start with a pilot site, see how it goes, and get, these early learnings. Because at some point that will give you a competitive advantage. When you've done these early learnings, and then when everyone tries to catch up, at least you have these early learnings, you know what's working or not working, and then you're well positioned on the long term. Oh, sorry, on mute.
Before I go into the next question, anyone who wants to ask a question for the end, I think we'll have a few minutes at the end. There is a little Q&A button at the bottom, so feel free to throw anything in there as we go as well, and we'll answer that at the end. But I'll get into my last question, selfishly, is so how, I guess, specifically, or how have you, or how can you, I suppose, assist your clients with this? So you've obviously got a lot of clients already working in this space. I know Forvis Mazars specifically works with a lot of manufacturing and logistics, among, of course, a lot of other industries as well. But how can yourself and Forvis Mazars assist in this area of sustainability reporting? I'm sure there are many companies, both on this call and elsewhere, that don't have an internal sustainability expert. So they're going to need someone to help them, at least with a starting point.
I mean, the typical process we go through is to start with this ESG maturity assessment. So it's something quite quick to be done, but it's just a matter of sitting with the client, understand what are the key priorities, what they've done in terms of sustainability actions, and so on, and that really helps to define a roadmap. And a key focus for the next 12 months. That's what you want to get into, is log this next 12 months, and you see what you can achieve within this time frame. Quite often, as part of it, what we do is the carbon footprint assessment. So get this baseline year, measure your carbon emissions, and usually the logical step after is try to set these net zero targets. So really looking at your baseline, what are the low-hanging fruits that you can easily pick up, and try to have this trajectory of decarbonization. So this is a typical process around this net zero strategy. And what we do specifically for the carbon footprint assessment is really to go to this first step of meeting with the client and defining what are the operational boundaries, organizational boundaries for this carbon footprint assessment, what are the material emissions, and having a clear roadmap about how we're going to measure it. Then we implement the Someday solution, and we onboard employees onto this platform. So when we talk about implementation, it's really about setting up the API, getting all the transaction into the software, because still need to have a lot of financial data, invoices, and so on. And then the next step is, and this really a bit of a discussion depending on the clients, on the resources, is do you want us to do all the data entry? And so basically you can fully outsource the work to us, or do you want to dedicate a specific resource that will be more involved in the data input and so on, and we can assist when you have questions, And ultimately, at the end, what we do is a bit of a quality assurance, just to make sure that you have the right evidence, supporting evidence for any data entry, and that really helps with making it audit ready. I think that's really the plan.
Yeah, definitely, and I think and that's exactly right. Going back to that audit readiness and knowing that Forvis Mazars has the audit expertise in house as well, which is particularly useful for any companies who are facing those challenges to know that the company preparing this kind of work for you or assisting you with the work also has those audit expertise to lean on, and you're not there are definitely a lot of other firms out there, and a lot of them are very, very good. But from an audit perspective, there's those additional risks that come up where you just want to make sure that the work's not just being done, but it's being done in a way that is auditable. And as someone who comes from an audit background quite some time ago, but the way that audits are done isn't always what a normal person would feel is intuitive. So it's not always what you think would make sense, but there is logic behind it. But yeah, definitely helps someone having someone who's done that before. So
it helps also with processes. I mean, what we've seen as a trend is more and more the sustainability reporting part is being pushed to the CFO, and this is a good reason why, because the CFOs are used to have strong internal controls and processes around reporting. So it's really about setting up this internal control process so you can make sure that ultimately your reporting is reliable.
Yeah, definitely. I think prior to Someday, I was with Atlassian, and at one point in the US, they were going to start integrating ESG reporting into, maybe they call it ESG, sustainability reporting, into the SEC reporting, so the public company sort of reports that would go out in the US for Atlassian. And at the time, I was in the finance team, and we suddenly realized we'd never really thought about it because we were both two pretty siloed teams. We're like, wait, have we ever thought about the fact that they're going and publishing this report, this sustainability report, we're publishing this other report, and we've never really spoken to each other? And then we realized we should probably be making sure that nothing they're saying is conflicting with anything we're saying, and that we're all sort of aligned if we're going to start combining these into an SEC report. So it's been good to get teams to work together, but also, understanding that it can be quite good to have the CFO leading at least some of these efforts, because you do want these two things to align, but you also want all that rigor behind controls. And a lot of sustainability professionals that I speak to who don't have any of that audit or finance background, I say, you probably want finance involved, at least for the controls bit, because you don't want to have to learn about, documentation controls and audit controls and all that sort of stuff. It's not a particularly exciting area. It's probably handy to have some knowledge, but I particularly if you've got some US subsidiaries, or if you're based in the US, SOX controls, which are the US specific public company controls, are very complicated and very long-winded and quite exhausting. So if you can convince a handy finance person to take that job over for you, then you'll be very thankful for it. So we didn't have any questions come through, but I suppose, is there anything else before we head off? Then I will send this through to everyone, as I mentioned as well, after this. But is there anything else, Damien, you want to kind of call out before we head off?
I mean, I didn't talk about the climate reporting and what we can do in that space. So maybe that's an opportunity to do so. But typically, we helping clients do a gap analysis in the first place, just to give them a bit of an update of what the regulation is saying, how they will be impacted, and try to have a sense of what they've done so far. And we have this tool, it's called the Climate Reporting Readiness tool, that's on our website, but it's only 15 questions, and that give you very quickly a sense of where you are and what should be your key focus if you have to do this climate reporting regulation. So yes, having a gap assessment and educating boards, senior manager within the organization. That's very important to get this a bit of an understanding of what is expected. And then we can assist more with implementation around, carbon emissions for sure, but also scenario analysis, assessment of climate physical risk, transition risk. So quite a different ways to assess and help out clients in that space.
Yeah, definitely. I'll get that link from you, and I'll include in the email out to everyone with the link to the assessment that you mentioned as well. So I'll send a link to that tool for everyone, along with the recording of this. So yeah, I really appreciate your time, Damien. I'll send Damien's contact details out as well, along with the email, if anyone wants to get in touch with him with any sort of questions after the fact. And I hope you have a good rest of your day or afternoon. Good rest of your afternoon, and appreciate your time, everyone on the call, and Damien.
Thank you very much, Henry. Thank you, everyone. Bye.